Hello, everyone. Welcome to the 30th episode of Punch Card Investing. We made it to 30 weeks of this, guys. This is pretty awesome. We're down to Brad today, unfortunately, but he'll be back next week. Stay tuned for that. You might notice that we're possibly doing this at a different time for you because of daylight savings in the U.S., and I know we have a large U.S. audience, so that is why we're at a different time today, because we may have some issues coming up with keeping everyone at our usual time, wherever that is for you. Because of every country does their own sort of thing with clocks, and that's no fun. But anyways, we'll try to keep it around either this time or an hour later from now for the upcoming weeks. Just a heads up there. But anyways, we got a lot of stuff to get to here. We really wanted to talk about Facebook and all the news with the Metaverse and their shift to Meta. We kind of skipped over it last week, even though that's really when it was announced. Since there might be some very interesting opportunities there. Facebook obviously is throwing off a bunch of cash and a really great business, but we obviously just had this brand new news with Mohnish Pabrai and his massive portfolio shifts, including selling off a huge stake in Alibaba, which is after just buying into it pretty much. So that we're definitely going to get to that, but we were kind of talking before the show. We think we probably should talk about Facebook first, just so we can actually make sure we hit all the stuff we want to talk about there before we dive into all these details with mainly Mohnish Pabrai selling off Baba and the other shifts in this portfolio too. So if you guys are okay with that, just stick around. We'll get to all those issues. And if you have questions in the meantime, always hit that chat. I see we have a pretty lively group already before we even started the show. So great to see that. And I guess before we get into anything, be sure to smash that like button. Hit the subscribe button if you haven't already so you don't miss future updates, and check out all the goodies in the description as well. Anyways, guys, let's talk about Facebook, or Meta as it's called, before we jump into Pabrai. Frank, I know you did some pretty recent content on Facebook and kind of the shift towards the Metaverse and your initial thoughts on the thesis. I don't know if you want to kind of explain that and kind of what you see or your kind of perspective on the new shift.
Yeah, I haven't done a deep dive on Facebook ever. It's kind of been one of those companies that are obviously one of the best companies in the world. They've been doing well for a long time. But this shift is kind of what's intrigued me. The shift being to the Metaverse, and there's been a huge amount of CapEx spend that's going to be dedicated towards that, as well as operating expenses. Their margins are likely to decline. So you really need to kind of believe in this Metaverse, which is difficult to do because it's hard to even imagine what it's going to look like, what kind of profits it's going to bring in. It's really a bet on Mark Zuckerberg's ability to allocate capital. I haven't gone through the history. The first one that jumps to my mind is he seemed to overpay for Instagram, but that clearly didn't turn out to be the case. It turned out to be a great bet. So assuming he can continue to pull off something like that, and he does so with the Metaverse, this is probably a great inflection point. But it's going to go one way or the other. I don't see it kind of just playing out smooth sailing as it has in the past. They're really dedicating towards this, even the brand shift towards Meta. And it's a huge cost kind of sinking into it. So I'll probably lean towards the side that it does work out for them. But that's from very surface level research. What do you guys think?
It's weird because it's like a shift away from their bread and butter, which is advertising revenue essentially and data, or is it? I think the real problem here is defining what the Metaverse really is, because now every company seems to call themselves a metaverse company of some sort now, even when they were never thinking about it before, because I think it's kind of a semantic game right now. I think Facebook's probably more serious about kind of the VR sort of aspect of things with like Oculus Rift and all that stuff, and incorporating that in somehow, because there are definitely lots of opportunities there, especially as you get the rise of things like 5G and more internet capabilities like that. I think that'll be a nice sort of synergy with things like the Metaverse and VR and that stuff that requires a lot of data, like internet power to really run efficiently. But it does have me worried from a valuation perspective, because it seems like people are factoring in their current margins for the long term. And because even though you can make an argument that it's fairly valued right now, even as like a traditional sort of value investor because of how high their margins have been and how much cash they throw off. But if you see those margins shrink, even as revenue continues to grow, that could be a bit of a turnoff if people are really projecting in high growth in everything while maintaining those hefty margins, because this is a different business than just straight up advertising.
I think one thing that's almost concerning too is it might be a forced bet that they're making here, because there's really two aspects to the business. There's what they call the family of apps, which is the Facebooks, Instagram, WhatsApp. There might be another big one I'm missing, but essentially that's all it is. It's an advertising platform. That's what they've been this whole time up to this point. And they've kind of been dabbling into, I think they call it Facebook Reality Labs, which is the Oculus VR, augmented reality, all of that stuff. And really that's what they want to grow. That's what the metaverse is going to come out of. I think they're forced into this bet of Facebook Reality Labs because they can't really grow their daily or monthly active users anymore with their apps. Maybe in other parts like Asia and other parts of the world outside of the US and Europe, they could probably increase their kind of revenue per user, but they've reached about 4 billion or something crazy. I don't know the exact number, but 4 billion users on their platform. So that's over half the world.
3.85, yeah.
What was that?
Almost three, like 2.85 billion. Yeah.
Yeah,
That's
okay.
what
So
you mentioned.
Yeah, 3 billion, 4 billion, whatever.
7 billion people.
regardless, it's some ridiculous number that cannot really grow much more. Their only hope would be to increase again the revenue per user on those apps, which I'm sure they can do, but the growth cannot continue from the 30 and 40% numbers they've been putting up for the last 10 years or whatever it's been. So I guess they're kind of forced to shift into something else that can bring in more revenue. And again, I'm leaning towards they probably do pull this off, at least to some extent. But yeah, you really have to have faith in the ability to, well, Zuck's capital allocation ability.
Yeah, and you're very much like along for the ride with this thing. It's interesting. I don't know off the top of my head the percentages, but Facebook has some interesting kind of voting rights structures with their shares as well, where Zuckerberg, still has a big chunk of the company, but I think he's got like 50% voting rights or 60% voting rights or something.
Mm-hmm.
So you're sort of just along for the ride with whatever Zuckerberg wants to do. And the way I've always sort of thought about Facebook is the underlying business is just spectacular. Like they have no debt. They basically print cash. They spent a bunch of money on basically trying to tighten up their sort of security systems and so on a couple of years ago when the whole Cambridge Analytica scandal sort of happened. And then you've sort of always had like, the Oculus and virtual reality kind of in there as maybe like a free option. But like Frank says, they're now putting a huge amount of money towards CapEx in that department. And we really don't know exactly how much that's going to pay off.
It's crazy to see how much the revenue has grown. Even what Frank was saying about how like they haven't necessarily reached a like critical mass of people, but at a certain point, there's only so many accounts you could possibly have open because there's only so many people out there. If they've continued to, even in just the last couple of years, they've continued to grow revenues pretty substantially, despite kind of being towards that more mature side of like the ads business, which is really what a lot of this is. So it makes me wonder if the whole metaverse side, whatever it turns into, will it be kind of like an AWS is for Amazon now, where you have like the backbone that's a lot lower margin business with e-commerce. So it's definitely not apples to apples, but in the same sort of way that their growth engine is really AWS and their sort of tertiary businesses, not so much the e-commerce kind of backbone that it started from, the spawner framework, if we will, while we're talking about Mohnish Pabrai, right? That's where it gets interesting. If this really blows up into something that we can't really imagine right now, in the same way that I'm sure AWS did, you probably wouldn't have really understood what the capabilities of that were when it first came out. It might be something like that, and that's where it can get really interesting. But the risks are high too. So
yeah, I've just shared my screen from Facebook's latest earning presentation. I'm not sure if you want to share that, Jack, but this shows their monthly active users, and this is kind of like Facebook is a or at least the advertising side of the business, is relatively straightforward. Like Frank mentioned, they've got growing monthly and daily active users. I think they're pretty much tapped out. If you look at like US and Canada, it's more or less flat now, and they've still got some parts of the world growing. But then the other kind of driver for the business is this slide, which shows average revenue per user. And they've sort of had like a spanner thrown in the works recently with some changes from Apple as well. I'm not sure how familiar you guys are with that. But, Facebook is super attractive from an advertising perspective if you've got a small business or something, because you can be very, very targeted about who sees your ads, like what age group, what part of the world they're in, what interests people have, all sorts of crazy stuff. And Apple have made some changes now to where Facebook, can't capture as much of that data unless you kind of opt into it. So that makes the advertising platform a little bit less attractive as well. So it's going to be really interesting to see what the average revenue per user, I guess, is what I'm getting at, kind of does over time with those changes as well. I don't think we really know what the full impact of that's going to be.
Well, I'd have to think what would cause it to go down. Sure, maybe the data is less precise now, but what's the alternative? And if every other platform can't do it either, are they really losing? Unless people just stop using Facebook or any of their subsidiary apps cold turkey. I mean, are they really losing out?
Another one of their problems that is well known and kind of being addressed by Facebook is that they're kind of getting towards an older user base. Young people aren't really using these apps. So I guess over time, as that kind of phases out, really only Instagram is what's doing well with the younger audience.
Yeah, I was going to push back there.
But even that's competing with a TikTok, and there's always room for a new platform. I used to think that there really wasn't, but TikTok kind of showed that something can come along and kind of compete pretty quickly. So with the younger audience particularly, I think it's going to be a problem for them. Facebook certainly is a much older audience. It's only really Instagram that's keeping them kind of popular with a young audience.
Well, I wonder with that, because there's always a leader, obviously, and it wasn't always Facebook. But because they're so huge and have so much money now, they acquired Instagram as a competitor. They've acquired WhatsApp. I'm not saying they're going to go acquire TikTok. It's probably well past that point of being feasible. But
antitrust.
Yeah. That is one of the larger risks, depending on how you want to weigh that, with Facebook and many of the big tech firms. It's that they're too big, or however the government decides to define that. That is a threat, but they have that ability to pivot just because of their sheer size and the amount of money they have, and because it's such a low capital business. It's data they can transfer I'd assume pretty easily. Getting around privacy laws, of course, but I think what I'm trying to say is, like, just because you can form your own social media company at any time, it's very hard to get past that kind of barrier of not only just making a lot of money, but also having a large pool of data, especially in an environment where Apple, for example, and other companies and the government are kind of frowning upon collecting data without telling people or without giving them more optionality to not do that. So that would make it harder for competition to come in and compete with something like Facebook that already has years of data, that even if they stop collecting now, I'm sure they still have plenty that they can kind of massage into something useful with new users, even if they don't provide any new data anytime soon.
They've been working on this Metaverse stuff for the last 7 years now, right?
You go ahead, Kran.
Yeah, they've been working on Metaverse for the last 7 years now, haven't they? They got Oculus 7-8 years ago, isn't it?
I think
I guess that's about when they... Sorry, Tom.
Go ahead.
You're on big lag, Frank. You go.
Yeah, Frank's lagging a bit.
Yeah.
I guess that's when they bought Oculus or somewhere around that time period, but I don't think it was necessarily a focus on Metaverse since then. I think that's a more recent concept, at least as far as I know.
He's actually mentioned it. So there was a recent interview with Gary Vee and Mark for like half an hour or something, and they talk about everything related to the Metaverse and starting early, and then they had this 7-year lead. And what Mark had mentioned is that it's more about control. So right now, they've got to build apps according to the smartphone ecosystem. So they can't really control the hardware that's being used. So I think that's what they're trying to do. So in the next iteration of what the smartphone will be, they want to build out the metaverse so that they control not only the software aspect of it, but they also control the hardware that people are using to get onto the metaverse. So it's more about control, I think, moving forward for Facebook.
One of the main pushbacks, I guess, on the metaverse that I've kind of come across since kind of looking at it is people wanting it to be more of this decentralized kind of moving away from the big organizations with kind of crypto and all those things kind of being factored in and Web3 and everything else. But other than that, you're right. They do have kind of, you could call it a moat with the virtual reality, the Oculus and the hardware behind it that they do need. But I'll be interested to see how much of this could be a decentralized movement rather than something pushed by Facebook. I think with some of the concerns around privacy and everything else that Facebook has had, that's probably my main concern about whether they can pull off the metaverse. But yeah, that's just one little pushback, I guess.
Yeah, and it's hard to. I think this is part of the problem of like we're going into like an unknown space. It's like, is it going to be that there's like a Facebook metaverse and an Apple metaverse and a whatever company metaverse, or is it going to be more like the internet where everyone's kind of sharing a similar space with many different subspaces within it? That's where it's kind of hard to imagine. The way I conceptually think of it, I think of it as like each company's going to have their own kind of thing. And then maybe there'll be a more decentralized one elsewhere that won't have as many like Facebook specific capabilities or whatever company you want to insert. But I'm totally like hypothesizing. It's hard to really say.
The only thing I'm
Isn't this a bit
picturing,
like the Matrix, like this entire metaverse.
I think I've seen a lot of comparisons to Wall-E, where like the future civilization, everyone's on the ship and they're just like playing. They just have the screen directly in front of their face, and they're all like super overweight, and no one moves out of their floating chairs, like that sort of thing. I think that would be more likely.
Yeah, Mark's going to get us to plug into the system, with the pin at the back. Yeah.
That's more of an. I think that's more Elon. That's what Elon wants, right?
It does feel more Elon, yeah.
Yeah, Elon wants to put whatever in your brain to make you more efficient or whatever.
Man.
We can like echolocate with each other.
Do you guys have any feel whatsoever for like? I mean, it seems like the metaverse seems like such an abstract thing to me, at least, that I have absolutely no clue how to figure out how to even remotely kind of factor that into a Facebook valuation. I felt like Facebook was one of these companies that was actually a pretty straightforward exercise to try calculate a intrinsic value for it. It's like, we think monthly active users might grow at this rate. We think average revenue per user might grow at this rate, and then we can kind of look at the trajectory with what the costs have done over time, and they've got no debt, and it's kind of a straightforward equation. But this is a big kind of thing out of left field for me that I really don't know how to, like, I don't know before this news whether I would value Facebook more highly now after this news or less highly just because there's more uncertainty. I really don't know how to think about it.
I think before this, like if you just don't factor in the metaverse at all and you're kind of comparing it to some of the larger companies, the Googles, Apples, Amazons, all those businesses, it's certainly on a multiple basis the cheapest. The growth projections by analysts and everything else is higher than the other big five kind of companies, I guess there is. Their margins are EV to EBITDA multiples lower. Like that's just one simple way to look at it, I guess. But now that this is factored in, I think it's a lot more uncertainty, and you really don't know what's going to happen, which makes it a lot harder to value. But yeah, again, that's just the bet on Zuckerberg at the moment that he's going to pull this off. But I personally have no idea what the metaverse looks like. Two things that I think of straight away is the book Ready Player One, which is a great book. It's pretty much the only thing I can imagine, or Grand Theft Auto, which is just a video game that I picture everyone plugging in some kind of VR Grand Theft Auto. But
it might start as one or the other and kind of morph into the other, something like that. I would picture more like create your own character sort of thing at first, and then it might morph into more like something maybe that's less conceptually easy to understand now because we just haven't seen it yet. But I think to what you were saying earlier, Frank, about CapEx expanding, because you could see how steady their CapEx has been and plenty of cash from operations. If you put these together, it's free cash flow. So obviously there's a ton of cash flow minus this blip here during 2020 when their ad revenues were down, when everyone hungered down for a while.
Would you mind just making that annual and stretching it out a bit, Jack?
Yeah, let's see. Annual. I was in quarterly for revenue. Here, I'll be back in a moment.
Sorry.
And for context, they kind of said in their earnings, I think the number was 32, maybe 34 billion in capex, kind of going forward, which is all going, well, largely going towards the metaverse and Facebook Reality Labs. But I don't know their usual capex, so I don't really know how much of an increase that is.
Look at that.
Yeah.
So what's that most recent capex?
So for 2020, it was 15 billion compared to 38 billion. So plenty of free cash flow on top. So wait, you said they planned on adding how much?
34 billion, but I don't know if that was over
it's
1 or 2 or 3 years. Yeah, it might be over a longer time period.
It's got to be. So how much revenue could you really expect from this operation, and how would they do it? Would it just be ads being shown in front of you? Would it be selling products in this universe? In essence, creating like software sales? Would it be like a membership in this universe?
I did listen to a pretty interesting interview with I'm blanking on his name. He has a pretty big podcast anyway, but they had kind of some expert on tech, and he was talking about the metaverse. And the way he kind of described it was like an augmented reality kind of laid over the top of the Earth. So there's this kind of virtual space that is exactly the Earth, and some kind of business could plug in, and you could visit that place in virtual reality, and there'll be some kind of fee attributed to the people that create this augmented reality that's overlaid the world. I don't know if I described that really bad or not, but in my head it kind of makes sense.
I mean, it'd be pretty sick if we could like if the punch card live streams were coming from some sort of virtual world, like we were all in Grand Theft Auto driving around talking about investing, and the people of the chat were like out there as well.
Yeah, you combine like Clubhouse and like live streaming, but it's like Clubhouse, but you're in like a world, and you can call people up to talk to them. That would be kind of neat.
We're just all virtually sitting on the stage, and we have a big theater in front of us full of our audience live.
Yeah, the thing about that is like, yeah, that sounds cool, but I wouldn't want it to replace like, you know, normal shows or going to see like something live.
Burma.
Not everything has to be so immersive. Like,
okay, Boomer.
Yeah, I know, right? Exactly.
I think people would be happier not looking at us. Like they would rather listen to us even now.
Yeah, probably. Maybe so.
Yeah.
Maybe so.
They might start throwing virtual tomatoes at us on the stage.
There we go.
That would actually be kind of hilarious. Yeah, tomato. Like ban them for bringing in certain things. Like, can you set rules and like what you can throw on the stage?
We could have a virtual security guard drag them out.
Yeah, yeah. We hire a bunch of massive virtual bouncers. That'd be great. Yeah. I think maybe before we move on to Pabrai, because the people are itching for it, and we are too. Is this sort of like, I don't want to call it a free lottery ticket because they're throwing 34 billion or whatever they're going to throw into it, but compared to their cash flows, revenues, it's, I don't want to say a drop in the bucket because it's not, but they can make up this expense fairly quickly at current levels. If nothing else changes, they don't grow at all. It seems like it's might be worth the risk. Is this the best thing they could throw that 34 billion towards? Maybe at this scale it is. I don't know if I want to look at it like a free lottery ticket though, because it is a significant expense, and they could keep sinking more money in after that, and good money after bad, that sort of thing. How do you guys look at that?
I view it more like a big acquisition, I would say, than a free lottery ticket. It's almost like they're allocating a bunch of capital to a new business, and it's like they've paid a bunch of money for a startup almost. Like we don't have a feel for how much cash might actually come back from this big investment. So I used to view Oculus and virtual reality at Facebook as kind of a free lottery ticket, but I probably don't anymore, honestly.
Well, I think while the ads business was still growing at really high rates, And to give it credit, I think they did 30% growth year over year. So it is still kind of growing at high rates. But moving forward, that has to slow down at some point, which means it's less of a free lottery ticket than it was 5 years ago, when we kind of knew the forward growth was going to be very impressive.
Yeah, and they're sort of doing the opposite of what you'd expect many software businesses to do as they scale, which is kind of expand margins and get some positive kind of operational leverage. Like they're scaling their expenses faster than their revenue, which is interesting.
But that's data, I guess. Once you get like past that like critical mass of data, you can like really scale it in a way that people without that same amount of data can't. So I don't want to say it's runaway, but you take a look at something like Google, similar position where they have all this data. It's going to be extremely hard, huge uphill battle to catch up with that. And there's not much you can do about it because they have the data. And until you get it, you're going to be chasing.
We'll know if this is a good idea if we see Microsoft cloning what Facebook is planning on doing. Like in the next 2 years, we'll see Microsoft announce, we've got Metaverse. Exactly. The same way they cloned AWS. Yeah.
The one other thing that we didn't talk about that come out of this earnings was they increased their buybacks of $50 billion.
Yeah, that's right.
Which is pretty insane. So they're obviously going to see their margins hurt, which might slow down the earnings growth. But on earnings per share with those buybacks, maybe we see some pretty good EPS growth.
I totally forgot about that. That's amazing how it overshadowed this massive buyback program. And that's like a full year of, or not a full year, but that's like their whole cash balance right now, or approximately. I forget where it's at now, but at the end of 2020, it was at like 18 billion. I'm pretty sure it's higher than that now, but still, that's a lot of cash to throw at it.
I've been watching Uncle Warren.
Yeah. Yeah, you just put out that video that's his biggest investment of all time, which is a funny way to put it because it really is.
Yeah.
Massive Berkshire buybacks.
Yeah. So is Facebook going in the punch card portfolio, guys?
Oh yeah, we should vote. We should vote. I don't know if I like it enough at current prices.
Are we going to vote? Like all four of us vote, and then we need to get Brad's before.
Yeah, we'll have to get Brad's by proxy unless we.
Well, if two of us say yes, we'll have to talk to Brad.
Yeah, exactly, exactly. I don't know. It's on my watch list for sure, but they're already such a huge company, and I just don't know how much.
Is anyone invested in Facebook right now? That's an obvious.
I have a tiny bit that I carried over from long ago, but it's like
none
less.
of us are invested in it right now.
Yeah, nothing significant.
Okay. I'll start off with my vote and say, looking at the positions in the punch card portfolio, I would add Facebook, so I'd vote yes.
Ooh, spicy!
Wasn't expecting that.
So we got one yes.
And I don't own it, so I wouldn't actually buy it at current prices. But relative to the portfolio we have right now, I would add it.
That's fair.
So what don't you like?
Yeah,
Frank's not a fan of.
I'm not naming names. I'm not naming names.
Oh, come on.
There's two in there that I would put this above.
Wonder.
Duacron, what do you think?
I'm not sure.
Boo.
I'd say
that sounds like no to me.
Yeah, that can't sit on the fence.
I just don't like the idea of metaverse and like the fact that it's pushing people to go more online and more into Facebook's ecosystem.
But
I don't know.
Think of the dollars. Think of the dollars.
I clearly don't care about dollars because I'm invested in Seritage. So
yeah, I'd
light that stuff on fire.
Yeah.
I'm gonna say no. I like what we said earlier. Like it's a fantastic company it's probably still gonna do fine, but I'd rather have it come down in price a good bit more before I would take a big swing at Facebook. And we had that opportunity in March of last year to really get at a super steep discount. And they've gone on a tear since then. So we'll see if we get another opportunity in the near future with this new sort of catalyst potentially. I'm a vote no. That's my long-winded way.
While the boys decide, Jack, can you pull up the punch card portfolio just so new audience members can see what we do hold?
Tom, you mind doing that?
Yeah, sure.
I'm not logged
Give me
in.
a sec.
So for people listening, I guess we're managing a theoretical 1 million or 100,000. 1 million, isn't it?
1 million.
Yes. So
200
we have 5 positions. All 5 of us made one bet at 20% of the portfolio, and we're kind of tracking it over time. We each vote on a new position, and if we need to sell something, the audience gets to vote it out.
Yep.
So we have 2 no's. If we get a third no, it's official. So Tom,
Who's the 2 no's? Who else said no?
Kron
said no.
Kron did a roundabout.
It's a good investment, but I just cannot be invested in a company like, I don't know. I'm just not for Facebook.
Oh, it's a moral issue. Ooh. Fair enough. All right, what do we got?
Right. So bear in mind, it's been like 2 weeks since we made this portfolio, so don't judge our performance.
Massive divergence.
Our $1 million is now $1,002,345.11.
Hey, that's the way, guys. That's the way.
Compounding.
Yeah, and this is
management.
this is punch card versus the index. Wah wah. And yeah, current positions. So they're all 20% at cost. Alibaba, Turtle Beach, Kelly Partners, Process, and Seritage. And this is current performance so far. Obviously, it's been very short term.
Look at Kelly Partners running away with it already.
KPG's carrying the entire portfolio.
Yeah, it is.
And it's got a currency loss of 2.4 as well.
Yeah, it's pulling through, pulling the dead weight. Multiple
Damn
ways.
Australian dollars.
So that's on Share Site. We got our link in the description below if you guys want to check that out. That's what this software is. It's a nice, clean tracking system, and it does currency conversions, as you can see as well, to see what your currency loss or gain is as well. So it's a nice, tidy package. If you use our link in the description, you sign up for an annual pro membership for 1 year, you get 4 months free using our link. So definitely check that out. It helps the channel out too, and we'd very much appreciate that. There's also a free version as well that you can sign up with if you want to check it out.
Cool.
All right. With that said, any last thoughts? Oh yeah. We still have to vote.
Remember, relative to the positions in the portfolio.
That is
a big point. Yeah, relative to the positions in the portfolio.
It is. It is.
Boy. And my vote was clear before you said that. Yeah, I'm going to say no. Facebook is one that's not in my portfolio, but should be. I just flat out missed it in March last year. It's one that was on the watch list, and I had done valuations on, but it sort of hit margin of safety price so briefly that I just fully missed it. Should have had some limit orders in there or something. But
you get thousands of pitches every day. You don't have to swing it.
There's always going to be another opportunity.
Yeah. If the price was different for Facebook, I would be very tempted. I guess the main position in the portfolio currently, if we put it in that perspective, that I just don't know enough about to make a good call on. That's why I'm voting no is Turtle Beach. I know the other ones pretty well, but I probably need to do more work on Turtle Beach just to get comfortable with that position before I say that we should get rid of something.
Turtle Beach also started their massive buyback program recently. They bought back
like $5.
They bought back. Net it was like less than 1% of their shares they bought back, but it's something after issuing quite a few shares over the last decade. So anyways,
yeah.
All right.
So if the price was different, I'd say yes, but it's a no for me. So we don't need to consult Brad.
Yeah.
Someone might.
I feel like Brad would be in a similar spot though, because I feel like he'd be in it. But then again, I don't know. We'll ask him next time. Brad, what would you have done? Put him on the spot. He's in Turkey again, dealing with his contacts over there. Hey guys, I think we're at an all-time high on concurrent viewers on the stream. We're at 90, which I don't think we've hit before. Yeah, the channel is going to the moon, and I think now this is a moment that everyone's really been waiting for, which is the fresh news that Mohnish Pabrai sold off a bunch of positions, and I think only sold. No, he did add to Races. and Micron a little bit too. I'm going to pull up ticker
He's going
here.
all into real estate. He's going all into Seritage and races.
Yeah, that's why Brad's in Turkey again, because he saw this news and he booked the next flight out. So yeah, that's he's checking out some more races again.
Yeah.
Look at all this action.
Yeah, we might have to talk through some of the nuances of these things, Jack, because there's a lot of different dates on some of these holding updates. So
Yeah.
for anyone that doesn't know, obviously Mohnish Pabrai files a 13F in the US, which tells us his US portfolio positions quarterly.
Oh, real quick,
which is-
we'll do our quarterly 13F video next week. If you guys stay tuned for that, we'll take a look at all the super investors that we'd like to follow and see what they did over the last quarter. This will be kind of like a sneak peek for one that just happened with Mohnish Pabrai. But go on, Tom.
Yeah.
Sorry about that.
Yeah, so we get all the 13F updates. So we just had one for giving us data up to the end of September for Mohnish Pabrai, and that's where we saw that he sold out of Alibaba. But Ticker will also pick up any other filings that happen around the world. So you'll see there's like trade reports in Japan, 5% filings and stuff in there. But that doesn't necessarily mean we're going to get updated all the time. I guess if he made a change, I assume we would see updates for some of those things. And it's also not going to pick up every position. So I think we were talking in our group chat just this morning about whether, NASPers or Process might turn up in here. And I just don't think Mohnish Pabrai quite has the scale to trigger any of those shareholder reports with those non-US positions. So those are things to keep in mind. But what I was going to say is maybe we should just list this or sort by date. Might be a good idea on this as well.
That is a good idea, actually. But to what Tom was saying, it's an incomplete picture, but certainly some interesting nuggets to pull out regardless.
Yeah. Maybe just flip that the other way around.
Oh, yeah, sure.
Yeah, so lots of action.
And just to touch on the 77% sale in Alibaba, that's probably going to turn to 100%. I would say this is a recent sell and he's exiting the position. But there'd be no reason he would trim it so much and leave a 2% position in the portfolio. I would say he's about to exit the rest of the position. That's speculating, but I'm pretty sure that would be the case.
Yeah, it would be kind of weird otherwise.
He hasn't sold
I
out of
agree.
anything at 100%. So
That
there must
is
be
also
something
true.
else.
He could just leave it to a small position where it doesn't kind of move the portfolio. But yeah, we don't really know what he's doing or where he's moved that capital. But I would be surprised if he just sold it and did nothing. I'm kind of curious to see if we find out if he did invest in kind of Tencent or Process or one of those other aspects to kind of reach that position, or something else that we might not know about at all and he hasn't really been public and talking about. But
Some
I
private
couldn't see
holding,
him just taking
venture
what was that?
capital.
What was Alibaba earlier? About 10% of the portfolio or so?
12%.
Yeah,
12%. Yeah. So I couldn't see him taking out that much from a position and just keeping it in cash. So I'm curious to see kind of what happens moving forward.
Mm-hmm. Yeah, I'm sort of wondering, like, there's obviously the fact that maybe he sold it to buy something else, like one of the kind of 3 10-cent options, like the NASPers, straight up 10-cent in Process. But he sold a bunch of stuff. I wonder if he's maybe even had a big redemption or something like that out of his fund.
Sounds like a redemption. Yeah. Either redemption or tax purposes, maybe.
Yeah, we were speculating on tax loss harvesting in the U.S. at least, where you sell something at a gain and sell something else at a loss. Alibaba has obviously had a pretty big loss since we assume he started the position, so it could be kind of cycling there to raise your cost basis on something else. It's hard to say exactly again because it's an incomplete picture, but that could be as well.
Yeah, one he's just sold with the same dates there, end of September as Rain Industries, which is a pretty substantial position for him, or at least it was before these sales. And that's one that he does have a big capital gain on. So I don't know if he's trying to offset it with Baba or something.
I wouldn't be surprised. But then the question would be, is he going to rotate this right back into Alibaba? That'd be kind of weird, but he might do it if he's really. But in that case, you'd be not into Alibaba, back into Rain, because you'd be raising your cost basis there if this is really what he's trying to do. I don't know if that's what he is trying to do. Or maybe he's scared of a tax policy that might be coming down the pipeline in the U.S. for capital gains. Who knows?
Yeah.
I did just see in the chat, lazy investor, when we're talking about how many people are watching, which is now up to 95 people watching.
Yeah.
Only 19 likes at the time, lazy investor said. So
Oh
if you're in
no.
here,
Come on.
do us a favor.
Let's tickle that like button real quick. Make it turn blue.
Tickle it. Tickle the like button.
Yeah. Let's get. We should have at least 97. Are we gonna break 100 for the first time, boys? That's
yeah.
something.
98 on my phone at the moment.
Yeah, it's getting aggressive. People are really curious about
Let's go.
Mohnish here.
Yeah. Share the stream, guys. Share it with your brothers,
Family,
cousins, mothers,
friends, not friends, strangers,
enemies.
Yeah.
So one question I've got for you guys, I guess, knowing that Mohnish Pabrai has sold out of Alibaba, how does that change your kind of conviction? Does it at all? Is it something you'll consider trimming, selling? How do you think about it now?
I've actually been
Hasn't
adding
changed
a bit
much.
to it. I've been adding around like the 160s where it's been kind of hovering, and it's now what percent of the portfolio now? It's probably like 3 or 4%. So getting more significant by the week, pretty much, as long as it stays kind of down here. I'm almost like dollar cost averaging into it, I guess. But I'm getting close to kind of where I'd want to leave it as like an allocation of the portfolio, just given the more systemic risks with China and the VIE structure that make me a little bit nervous. Granted, there does seem to be a pretty clearly good business behind it.
Yeah.
I like what
one of
Luis
the
is saying. I'll sell when Charlie sells.
That'll do.
Charlie will never sell. Yeah, that's actually an interesting point. We got Daily Journal Corporation's 13F really early, so it's actually the same quarter that we're looking at where Munger added 80-something% or whatever it was, and Mohnish has sold a bunch. So it's like, which super investor do you want to copy? Or do you land in the middle and do a Guy Spear and do nothing? You've got 3 different super investors who've done 3 different things.
Guy Spear is
Alibaba in
the
the same
person to
quarter.
follow.
Yeah.
And here's Daily Journal. As you can see, the large ad, which makes sense if you're bullish and you just bought at a higher price, much higher price. Why not take another swing at a lower price? One would think.
Yeah. Does it change anything for you, Karan?
Nope, not at all.
Fair enough. Yeah, I'm kind of in the same position. Like, I will say this surprised the hell out of me. I did not expect to see a Mohnish Pabrai sale when I woke up this morning. But
I don't think anyone really did.
Yeah, but it's like we've talked about with cloning forever. It's one thing to clone the idea, it's another thing to clone the conviction. And I think most of us, maybe Brad thinks about it a little differently. It'd be good to get his perspective on this, but I think most of us at least aren't necessarily just blindly cloning. We're using it as an idea source, and we're kind of doing our own work on it.
Yep.
And that's really important for when you get into positions like this, where suddenly someone sold it at presumably like a 20 or 30% loss or something. And you're kind of just going to be sitting there not knowing what to do if you haven't done the work on it.
If Pabrai sold Heritage, that would shake me a little bit because he owns like a good chunk of the company and he probably has better insights than I do sitting so further away from the company. Like he actually has talked to management. If that's the company we're selling out of, that would shake my conviction a little bit. But with Baba, it really doesn't change anything.
Yeah, I guess this is kind of my pushback against cloning, or I guess the kind of more hardcore cloning where you just buy whatever a super investor buys without doing your own due diligence. Yeah, like kind of agreeing with and backing up what Tom said, you just really need to know your position and have your own conviction. So when something like this happens, you're kind of like the 4 of us where it's surprising, but you're rather unfazed about your own position. And I know some people maybe watching us maybe are more strict cloners. So I guess that's kind of maybe a reason to start building your own conviction in stock so you can decide when you sell, not just do what someone else is doing.
And yeah, everyone's situation is different, obviously. And these guys are playing at a much different level than I would say all of the people I'd imagine here. If you're a large fund manager, definitely let me know in the chat. But they have a very different set of incentives. It's not necessarily all of their own money. They're dealing with other people's money. I assume in pretty much every case, at least of all the super investors we find. I don't think it's all family money. So that you have different considerations there, different universe of opportunities, among many other different things. Risk tolerance, of course, and to what Tom said, you can't really clone conviction. It's really beauty in the eye of the beholder, ultimately.
Yeah,
Tom,
we just had a... Oh, yeah, sorry. I was just going to say we had a comment from... I'm sorry, I don't know how to pronounce that name. Jaromir, maybe, about SoftBank. I did have a reply to one of my tweets. I wondered that maybe he's decided to do the Naspers process thing and buy SoftBank instead of Alibaba, but I don't know if I quite buy into that one. I think I brought that up last week or a couple of weeks ago, that SoftBank isn't as much pure Baba exposure as like Prosus and Naspers out of Tencent, right?
Yeah, but it's a different basket, though, I think is what we're really saying when we're talking about SoftBank versus Naspers.
Yeah, but I mean, when you buy Naspers, it's like 80% Tencent, whereas if you buy SoftBank, I don't know the numbers, but it might be 50% Alibaba.
Right.
Or something.
From memory, I think it's about 40% of net asset value, but
yeah,
that was a while ago, so I'm not sure.
Mm-hmm.
They're too busy like dumping the proceeds from Alibaba into very profitable enterprises like WeWork. So
shots. So yeah, this is all the super investors we've got so far for this same quarter, just to kind of put things into perspective. So
for Alibaba specifically,
for Alibaba specifically, sorry, yeah. So a bit of a
and
mix.
there are other
of
funds that are not
buys and
here
sells.
also, like
Yeah,
the fund that's put like 50% of their capital into Alibaba and stuff.
yeah, it takes some kahunas.
I love just these guys here. Like, yep, I'm here.
Yeah, just
Nothing.
checking in. Forgot to go to work that quarter.
Every quarter, almost.
Yeah. So yeah, I don't know if I have manga style. Don't have much more to really add on this, but I don't think it changes how I think about Alibaba too much personally. But it's surprising.
Does it change how you think about Mohnish Pabrai? Or we're still missing quite a bit of context, I think.
Yeah, there is no context. Yeah.
Yeah, there is
I guess that is true. It's really none. The only context is
actually,
the screen with all the holdings is pretty much it.
Yeah. Actually, one of the other things I was going to say, I don't want to speculate on names. I've seen a couple floating around, but we should probably wait till we get something more concrete. But supposedly,
whatever, he bought Tencent, Tom. We know he bought Tencent.
No, I actually wasn't going to go there. I was going to go to Turkey. Maybe that's where Brad is trying to figure out what he's been buying. But supposedly, Pabrai's bought at least a couple of things in Turkey recently outside of racist logistics. Yeah, I've seen speculations that it's a particular, I think, insurance company, but to be confirmed. So maybe there's money going there as well. I don't know.
Here's an idea. Selling Baba and then moving it into the Hong Kong listed version of Alibaba. That'd be kind of weird, but I don't think he's trying to hide. That'd be kind of weird. And you're not really getting much of a structural advantage because, like Tom, you've done some digging into this before. They're both the VIE structure, so you're not really avoiding many risks by moving from Baba to the Hong Kong version on 9988. At least that's my understanding. So I don't think he would do that.
Yeah, unless he's trying to lock in a loss and can buy the same thing or something.
Yeah,
Again, again, I think it's if what's the phrasing you sent through this morning, Jack? If it's sufficiently identical, it doesn't count or something.
I don't know what the IRS would do about this since it's on a totally different exchange and it's technically a different entity. I do wonder what they would say.
That'd be like selling Berkshire A to buy Berkshire B or something.
Kind of.
Tax losses.
Or better yet, like something that's dual listed, buying something on the New York Stock Exchange and then selling it on, I don't know, the Amsterdam Exchange or something. I don't know, something like that. But I'm no tax professional. None of us are.
Yeah,
that would be some gaming for sure.
What if you sold to buy into Facebook? Meta.
We would have seen it.
Then
Would
we'd
we
have to revote on Facebook, and we might get it in there.
Would we have seen it if he did it after the cutoff?
Oh,
If
well, no, but
if he
you'd
sat
think
on
he's doing it.
cash and then just waited till the next day.
Yeah. When the company's that big, he's not going to be sneaky and
Oh no
think
no
that
no!
if it shows in his 13F, he'll move the needle or something. I can see him doing stuff like that. Like when he was pitching into a graph tech or something. Like maybe he didn't want to put on a starter position right at the end of the quarter because it's just like a $2-3 billion market cap or something, but not Facebook.
He's all in on Floki Inu or whatever, and Shiba Inu as well. Diversified crypto portfolio.
Party like it's 1999.
Only with blockchain.
Yeah.
The future.
Yeah.
Should we start taking some questions?
Yeah, let's get some more questions in here.
Have we hit 100 yet, Jack, or not quite?
I haven't been keeping too close of an eye on it, but it's been hovering in the 90s, which is I don't know. It's an ode. It's a nod to Charlie Munger if we can sit up in the upper 90s or something. I don't know.
Yeah, I've been. This is a completely random aside, but I keep having this thing pop up on my. Like on Facebook or something recently about when David Warner got out in the 90s for the first time with Commentator's Curse. Have you seen that, Frank?
I briefly remember it, but not much. No.
We don't want to do that to the chat. For anyone that doesn't know, David Warner's an Australian cricket player, and he was about to get a century, which is 100 runs in cricket for a batsman.
I'm sure Jack knows all about it.
I'm already
Jack
rusty
will know
now.
all about this.
We have a lot of post show discussions, and for like a couple of weeks there, we were talking about cricket, and I was getting caught up to speed.
Yeah. Well, the commentator was like, David Warner's never been out in the 90s, and he was on like 97 or something. And Shane Warne, who's probably like the best Australian bowler to have ever lived, was co-commentating and was just like, "Oh my God, why'd you say that?" And then he got out next ball on like 97 or 98.
Yeah, you can't jinx. You can't jinx. Let's see the equivalent to that in baseball over here in the United States. If someone's throwing a no hitter or a perfect game where the pitcher's like hasn't given up a hit or anything, you can't say that. You can't say like, oh, he's throwing a no hitter, or like, oh wow, he hasn't allowed a hit, because then you're gonna jinx it, and it'll surely go at some point within the next inning. You say that. Mm-hmm. It's funny, even during the game, the players on the same team will not talk to the pitcher. They'll just like they don't want to throw him off in any way. They'll just leave him in the corner and not talk to him. It's the same sort of thing. Mm. Anyways, that's enough trivia. Tom, what? Go ahead.
Just quickly, New Zealand versus Australia in the 2020 World Cup final on Monday.
That's intense. Mm. Do we have some bad blood in this room right now?
Well, we'll find out on Monday.
Tom, while I pick a couple questions here, why don't you tell everyone why you have such a glorious mustache on those lips?
Oh yeah, it's quite good looking, isn't it? We're raising money for the Movember Foundation, for anyone that doesn't know. So we're actually up to 13. We had a late comer to the Margin of Safety team. So there's 13 of us who had a shave on the 1st November, and we're growing a glorious moustache to raise some money for Movember Foundation, which supports men's mental health, suicide prevention, and also the 2 male-only cancers. So, this would have produced 13 days in, but we've still got a while to go. So if you want to contribute to the cause at all, just go to any of my recent videos after this stream, of course. Don't disappear yet. We're trying to get to 100. And then you should see a Movember link through the description of all my videos.
Maybe that's why Mohnish sold barbers to contribute to Tom's fund.
Yeah.
We're going to get a $40 million donation.
an influx.
Yeah, that'd get us to the target, I think. Just
that would be something. Everyone is just and everyone's all hyped about this.
We've got spammed a question about OpFi. Has anyone looked at OpFi?
I listened to Bill Brewster's podcast, but that's all I know.
I was looking at it before the SPAC kind of happened. I forget when it was as a SPAC. I don't know the ticker name then, but it was semi-interesting comparing it to, I forget the nearest competitor now, Upstart, and some of the multiples that they trade at. Oh, and it's about my shirt too. Thanks, Garth Investor.
Thank
And
you.
he is a Facebook holder too, so it's good to see him in here. He probably should have been on talking about it, actually knowing a bit more than we do.
Wait a second. What's the A? That's not
Australian.
I thought that was
Australian dollars.
I thought that was what's the symbol for Australian? It's not just A, is it?
It's usually AU, but it comes up on
Oh,
YouTube
okay.
as an A.
I was a little confused there. I'm like, what is this?
It's still called dollars, though. It's not like pounds or.
Oh no! I mean, like, what's this? Like the symbol for like A?
Oh,
It's
yeah.
AU.
AU
Yeah,
too.
I know it's. I know you don't deal with like seashells or something down there.
You never
Because we're
know.
diversifying our basket of currencies. We're up to I think 5 now that we've received for super chats.
We need some Turkish lira next.
Yeah,
I
we
was
need some
going to say
lira.
that. We'll flick that off to Brad.
Yeah. But thank you, Garp.
My man.
I had a good. Wait, where was it? 9.
Sorry, where'd we get to on OpFi just then, Frank?
Oh yeah. So in comparison to Upstart, it was very cheap. Like I think if you think that it deserves the same multiples as Upstart, it would have like over 100% upside. And that was kind of one of the main appeals to it. And then from briefly following and just hearing Bill Brewster talk about it, something happened during when it actually went public under OpFi, when the SPAC kind of went ahead, and it dropped in share price fairly significantly. I haven't looked at the share price specifically, but it might be an interesting opportunity. It's got some good management team behind it. I'm blanking on the guy's name now.
It's in the Kyle Seminara.
That's the guy. Yeah, Kyle Seminara.
But he's not running it. There's a guy, relatively young guy, who's CEO that was on Brewster's podcast, I think.
Yeah, he doesn't run the business. He just funded the SPAC.
Yeah. But they basically do, I don't exactly know how to describe it, almost like hard money loans and that sort of stuff, right?
Very low quality loans to people with bad kind of track record. So more risky, small personal consumer loans, I think. So
Yeah, hard money would typically refer more to the investment side. That's more like payday loans. Where it's like short term, almost predatory. That's how it's usually seen.
Yeah, which is what they covered a lot on Bill Brewster's podcast. It does seem kind of like a very sharky type industry, but they seem to have some genuinely good initiatives. Like something that came up, and I know this is why Bill, I think he made an investment in the company and said he'd lock that money up for 12 months when he had the CEO on. And he just kind of said like it's really expensive to be poor in the US, like to start establishing good credit and just kind of getting up and going is difficult. And that's kind of the space I think OpFi are trying to, that's the issue they're trying to solve.
Well, it's a little difficult when combined with the fact that the price of everything goes up a few percent per year or many percent per year as we're in right now.
Super shit.
Oh, goodness gracious.
Hey.
Lazy investor. We interrupt this broadcast to bring you this question from Lazy Investor. How do you guys view gurus talking their book versus CEOs talking up their companies? One is good and one is no, I guess they're both. You wouldn't want a CEO talking down the company, so
Of course you would.
Yeah, maybe in a weird universe, perhaps. I want a CEO to be honest. I really want anyone to be honest. I think that's what really matters. But I think some of it's to be expected that they're going to be selling the business at least a little bit, because you want people to have good energy about the business. You wouldn't want them to be all negative all the time. And if you mean by guru someone who's like is kind of more of a shyster, or someone who's not like really honest or whatever, and isn't really an expert, then yeah, that could be.
It's like Pabrai talking about races, like in every talk for the last 15, 20 talks.
Okay, well, sure.
So I think that's what he means, like a guru talking his book.
I think that
like,
makes more. Yeah, that makes more
Pabrai
sense.
owns like 1/3 of the company, and he's aggressively promoting it. I think that's what he means.
Yeah, so in that sense, I guess both can be problematic. You don't want
Yeah.
to over promotional CEO running a company. And admittedly, Kelly Partners Group kind of toes that line. It's Brett Kelly sometimes comes across as over promotional, particularly towards the value investor, which he kind of pushes back on to say he's trying to build this quality shareholder base, investing for the long term. But yeah, I think you should be concerned if a CEO is very promotional and overly optimistic. You want someone that's kind of being realistic and honest with you as much as possible. And gurus promoting companies that they own, I don't know how much they could get in trouble for that. I guess they have to be careful with what they say. I know some people are more careful about promoting these companies, particularly when they're smaller micro cap companies. So Races could be one that Mohnish Pabrai could potentially get in trouble from. I don't know the laws or anything around it, but yeah, probably not a great thing if they're really pushing it. But he doesn't kind of push in the sense telling people to go and buy it, but he just loves the company and talks about it. So
Yeah, I think as long as it's coming at it kind of the way Pabrai often does, sort of explaining it from an investment perspective and why he liked it. I don't mind that. If you're saying, if you're one of these YouTubers that says this stock's at 10x, I just put $100,000 in it last night, kind of thing.
Yeah.
That's probably over the line. For me
Jeremy,
personally,
financial
but
education.
Or Tesla's going to have a PE of 70 10 years from now, and it's like the whole world economy, that sort of thing. I think ultimately, yeah. So yes, Lazy Investor said that guru refers to super investor. So my apologies there. I misunderstood at first. But yeah, I think as long as you're being honest and you're not just blind and you're just being clearly exaggerating your position, then yeah, I think it's okay. It's to be expected, frankly, because that's the incentive. If you own the holding, you don't want people to think negatively of it. But you should also be honest with yourself when you're talking about a position or thinking about a position, because there's obviously negatives too. And I was just thinking about guys who overcomplicate this, like Bill Ackman, who go around saying one thing, maybe doing another, and whether it's intentional or not, it looks terrible. So it might be best just to be quiet about your holdings. You have your disclosures under 13Fs that you have to make in the US. Call it a day. No need to go around pitching, because it rarely is going to help you in the long run, I would think. And I guess in Pabrai's case, typically he's trying to do more of like a educational sort of lens to it, which I can appreciate. But when you're just going on to CNBC and pumping a stock, it's kind of like, okay, what are you really doing?
I think even another example of this could be like a super investor, like say Chris Bloomstrand, and say Warren Buffett is the CEO of Berkshire. Like they both at least understand the business probably in maybe not the same degree, but very high degree compared to other people. So when you look at Bloomstrand as a super investor and Buffett as a CEO, you can kind of gauge, when is sort of Berkshire cheap or when it's a good time to kind of get into it. Yeah.
Mm-hmm.
And actions always speak louder than words. So when you got Berkshire buying back tons of shares, they can say whatever they want, but look what you're doing with the money talks too. So
like a super investor with high conviction probably could be probably has the same perspective as a CEO, a good CEO. So
yeah, I agree.
Yeah, well, I mean, Warren Buffett is both of these things, right? And he's always, well, I wouldn't say he's talking down his stock, but he certainly tries very hard not to ever hype it up. When they first issued the B shares back in maybe the 90s or early 2000s, they literally said when they issued the B shares, myself and Charlie would not be buying it at current prices, but we're just trying to get rid of these stupid hedge funds that, set up vehicles where small investors can buy a chunk in the hedge fund, which owns A shares, because, that was a barrier to entry for a lot of small investors. That's why the B shares are even a thing. But yeah, they're literally like, we wouldn't buy it. We're just trying to solve this issue.
Sell to the crack dealers selling crack to the people who just need their shares.
Yeah.
We got a question here from you, as in YEW. Mohnish would be great in an environment where the money printer was not going burr, but he is struggling in a world where M2 money supply is over 10% per year. This is an interesting comment, I think, on value investing in general in like a bullish environment where prices go up more often than not. Because I forget who's complained about this recently, that like it was one of the great value investors out there who's just complained that there haven't been a lot of opportunities because the government doesn't want to let things crash and people don't want things to crash. So you get massive action from things like central banks to try and prop things up. And that eliminates some opportunities. For example, the flash crash in March was largely negated thanks to all the government spending and everything. I wouldn't say it's negated, but it prices recovered pretty quickly. So you missed your opportunity on Facebook because it only lasted for a week. You know, it's not as though it stayed down there for months. Maybe you had a while to build a position there. You can say that for a lot of different things. So is this sort of environment just like not conducive for good value investing? I would tend to say no, because value investing is kind of like I don't want to say eternal, in that you're really just trying to buy something cheaper than what you think it's worth, which should work in any environment theoretically. You just factor this in.
Yeah, I think maybe the money supply kind of comes into this a little bit, but the real thing is like, how does traditional style value investing work in a low interest rate environment? I would say is the real question. Like if you're traditionally, you know, doing a discounted cash flow or something like, right, and you're discounting all of the companies that exist in the stock market at a certain rate, and then interest rates go down and you discount all those companies at a slightly lower rate, it's going to be the growthier companies that end up having a more beneficial valuation from that. It's just how discounted cash flows work. Those back-end cash flows are worth more money if your discount rate's lower. So I think it's probably more a result of interest rates staying pinned really low, probably much longer than anyone ever anticipated coming out of the financial crisis. And when you've got a Mohnish Pabrai that traditionally at least has invested in these 50-cent dollar, relatively slow growing companies, where he's just trying to, you know, buy something for 50 cents on the dollar, sell it at 90 cents, rinse and repeat. Maybe that doesn't work so well. And I think he's probably, you know, started to make the transition to growthier stuff in the last year or so.
It's a fair take.
You know, I think something like Zillow wouldn't even have happened if there wasn't so much cheap money kind of going around in the system. Like interest rates have been too low for too long. Like,
yeah, that's just that you get misallocations of resources more often in this sort of environment where just money is being thrown around. A lot of, show me the incentive, show me the outcome. The famous Charlie Munger quote, in that you have a bunch of cheap money, you got to put it somewhere, you got to please investors, got to do whatever, pump your share value. So you're going to.
We should probably disclose that we don't have any hedge positions like Ackman. Just saying.
Yeah.
You know, if things go down, we are all hit.
Yeah, right. Exactly. Yeah, I think it's not that would go away if rates were higher. Of course, you're always going to have malinvestment, but I think it just increases in this sort of environment. To what you're saying, Karan.
Like SC says, long live the 50-cent dollar. I still like that stuff. And by the same token, if rates go back up, like there's going to be some growthy stuff gets hit rather hard. That's just how the maths works.
It's a double-edged sword. It's it's just hard to plan around it, because it could change on a whim. It could change many years from now, and you just got to battle through. And that's why, like, our mantra is just, you got to try to buy great businesses at a decent price, and hopefully the rest takes care of itself. But it can be very frustrating, especially in the short term.
You know, if interest rates go to like 7-8%, maybe ARK might start looking attractive. Like, who knows?
ARK might vaporize. It would just like
exactly might be attractive.
It wouldn't exist. Fairy dust, as Matthew McConaughey would say, of Wall Street.
Did you guys hear about that ETF that's betting against ARK?
Like
it's a new ETF that someone's come up with that's just focused on betting against ARK.
Just a short? Can't you just short ARK directly yourself? Like, why do you need the fund for it? Or does a fund does it short other things too? Gosh,
maybe you can't get a margin call if you do it through a fund or something. I don't know.
Yeah, I guess so.
Backed by Michael Burry, who knows? Yeah.
I guess it does shift the risk to other people, I suppose. Yeah. Amazing. Could always just pump some crypto in the meantime. Should we get maybe one more question?
Yeah, let's do it.
There was a real quick one I can touch on before we jump into a last one about
Yes, sir.
co-partners free cash flow.
Oh yeah, this one for you. Yeah.
So if you can find my write-up around, I actually don't know, maybe through Twitter, you might be able to find my write-up. I've kind of put an equation to kind of think about their true owner's earnings or an adjusted free cash flow, however you want to think of it. But roughly, just to give you an idea, about 60% of their free cash flow number is a more honest kind of owner's earnings, if you kind of want to think about it that way. But yeah, if you want to find the equation I use, it is in the write-up somewhere.
And they list owner's earnings in some of their presentations as well, right?
Yeah, you could find it that way too. But I adjust that slightly too, but it would produce a similar number.
Should we get a New Zealand housing market thought from Jack here? Not me. Tom, any thoughts as a home shopper? Any thoughts on the New Zealand housing market at the moment?
Yeah, and specifically with retirement villages is interesting. So New Zealand housing market, like most places, is red hot. There's not enough houses, and lots of people decide they want to have a home office now and want bigger houses and
lots of dollars.
Interest rates are nothing, and that's just kind of the situation. Like, you go to an open home and you can barely get in the house. There's that many people looking at these things. It's kind of crazy out there. With I think that's Somerset, Ryman Healthcare, and Oceania are those three properties there. So they're all New Zealand retirement village stocks. I would have to remind myself. I know Joshua Wang on YouTube has done some videos on these companies, but I'd have to check the accounting. But there's some weird stuff I want to say that comes through in the earnings for those companies where they have almost like unrealized gains on property show up. And I don't want to misspeak exactly how that's shown up, but I want to say there's some weird stuff in how you might want to view their earnings. Those, I think all three of those companies, at least Somerset and Ryman, have done pretty well over the last few years, just riding the wave of property appreciation. And I don't really have any doubt that there's going to be a increased need for senior housing moving forward. Like, people are living longer and they're going to be in retirement longer, and there's limited supply of actual houses for people to live in. So I have no doubt that there's going to be a greater need for senior housing, but whether that turns into an actual reasonable compounded annual growth rate for the business is kind of another question.
Has there been a lot, do you know, of investment into that space over the last decade? It's been pretty hot in the US, maybe to the point of overbuilding in certain areas. And I wonder if that's the same.
Yeah, big time. I don't know if you maybe even bring up Ryman Healthcare on ticker, Jack, and just track what their equity's done over the last, or their book value's done over the last 20 years. And actually, Jack's saying, they do include unrealized gains in their reports. Do you know what financial statement they're actually showing that on, Jack? Like, does that somehow flow through the profit and loss, or do something weird there? Because that's kind of concerning if that's how that works. That's like Berkshire's stock portfolio, how they have to run that through the income statement now, which makes no sense to me. But there's been lots of money flowing into big retirement village developments.
Let's see. Total assets way up.
So Ryman's been public for quite a long time. Can you blow that way out to like 20 years or something?
I can go, almost. Let's see.
And I guess just scroll to book value or something down a bit further.
Yeah, where is that? Book value per
total share. Just tangible book value, maybe.
Oh yeah. Oh wow.
How's that for a hockey stick? So I don't know.
That's a lot.
Could you throw the per share one next to that as well? I think that was right next to the. I don't know if they've done any dilution. Or I think if you select both, it'll see whether one's growing faster than the other.
It's so much smaller. It's so much smaller though. It wouldn't really. They look about the same.
Yeah. Can you get one on his we're testing ticker here. Can you put a like second axis in there? Oh,
There's
that
book
wouldn't
value
work.
per share and then tangible book value per share.
Yeah, I guess I'm just trying to get a feel for if the book value has grown faster than the book value per share, like if that's diluted. I guess we could just look at
It
the
looks
cheap.
like they haven't.
Yeah, you could just go to dilution on the income statement if you want.
We're overthinking this, but anyway, there's been a ton of money flowing into it. That's the point of that story.
Do you know? Have you looked into Rob Vinall much? I know he's an investor I follow, and he does own a New Zealand something along the lines of some type of retirement village company or something. So I think it could be the one we just pulled up actually. But
Yeah, I know of Rob Vinall, but I didn't know he was in a New Zealand stock at all.
I'll see if I can find his portfolio while we're talking.
Yeah, that'd be one worth looking at. There's actually, New Zealand's a bit of a strange place to invest because our stock market is tiny in terms of the number of companies. We're not quite as littered with mining stocks and stuff as you are in Australia. But yeah, there's not many companies floating around, and there's some pretty eye-watering valuations on many companies as well, kind of similar to the US, I suppose, in that way. And we also don't have many. Well, there's no like New Zealand super investor that I know of that I would be willing to clone on investments or anything like that.
Tom, you're the New Zealand super investor here.
I'm not the New Zealand
that's
super
Tom.
investor.
That's investing with Tom.
So yeah, it's
Ryman
kind of tricky to
Healthcare
find
is.
people to.
Oh, sorry. Ryman Healthcare is what he owns.
Oh,
Is
that's
that what-
literally what we're just looking at.
Yeah.
Yeah. Interesting. Do you know when he bought that?
I think he's held it for a while, a few years at least, anyway.
And he's done
That's
well.
nearly his biggest position in his portfolio from memory.
Interesting. I think it would be the biggest position for many New Zealanders if they've held it for a while too. It's gone up a lot.
Yeah, what is
It's up. It's gone from 44 cents in 2000 to $14.40 today.
Yep. There's a run.
So that's about 19.4% compounded annual growth is about Rob Vinall's compounded growth in his portfolio. So there you go.
Oh, yeah. All it takes is one.
All in Ryman. That's not quite as crazy as the A2 chart used to look, but that's come back a bit. Still looks insane.
Tom's just bragging about the only good New Zealand company at the moment.
Well, it's not that good right now. We've got a few decent companies. Fisher and Paykel Healthcare is another one that trades at something eye-watering. Zero is a New Zealand company, but much
Not
like
anymore.
Pavlova, Australia stole that.
Do a lot of funds flow into the biggest companies in New Zealand, like I don't know, retirement funds, pension fund type stuff? Do you get a lot of that in New Zealand?
You know what? I'm just going to bring up my KiwiSaver fund and see what allocation they have to New Zealand because I suspect it's quite significant.
Yeah, I'd imagine there'd be some sort of bias there, like towards the
Home
homegrown
country
stuff.
bias. Yeah.
In a similar way to like the US and probably every country that does something like this.
Yeah. What have
Guys,
we
there's a
got?
question
Yeah,
from
so
Shashi
this is
also.
so the KiwiSaver fund I'm in is 21% New Zealand.
Wow, yeah.
So that's, I guess, yeah, I don't know. We don't have many public companies, so that's probably quite a bit of money flowing in there. But
Yeah.
I don't know. That's the typical US 401k, less than 20% US.
Oh no.
Yeah.
But you're comparing but it is apples to oranges in that the US market is just so much larger. So you're gonna get a more
but so's the fund flows from 401ks versus New Zealand retirement accounts.
I mean, yes.
I don't know. You'd have to do the comparison, like market cap versus flows.
I'd imagine the ratio is probably greater with the New Zealand funds. But I'm totally guessing. I have no idea.
I don't know.
The thing with the US is you get a lot more international inflows, so that's probably going to offset any difference. Curious. Kron, you were saying?
No, there's a good question from Shashi about bonds. You want to cover bonds?
Are any of us into buying bonds? Not
I
now.
know you're using XYLD or QYLD?
X for it's that kind of is my replacement sort of income besides real estate, of course. X yield, XYLD is covered calls on the S&P 500, and that's kind of like that's like 5% of my portfolio, and that's like sort of my bond replacement. Granted, it has equity risk. If the S&P goes down, that's going to go down too, but it's going to limit the downside at least a little bit because you're selling covered calls off the top, so you're kind of locking in that income there. So that's kind of my replacement for bonds. As sick as that is, but that's just the environment we're in with these insanely low yields.
I'd love to own bonds in a different time period, I guess. But at current prices, there's no way I would go near them.
It's return-free risk. Really, that's how I look at it. In that,
particularly as I got older and I'm trying to be more kind of defensive with my portfolio. Right now, I'm kind of taking on more risk than most people probably should. So I wouldn't go anywhere near bonds. It's just going to hurt my returns. But when I'm, say, 50 years old, I would like to own bonds as probably a substantial part of my portfolio rather than maybe as a cash alternative or just a defensive thing to hold in the portfolio. But
assuming yields are up.
assuming yields are up. But like, I'd have to be getting at least 4 to 5% or something, but there's no way I touch them at 1.5 or whatever it is at the moment.
Yeah.
I think even buying Berkshire right now, it makes a lot more sense than buying bonds. At least they've got their buybacks. So you're getting a yield from that.
They have a lot of cash, so that should limit some volatility, one would think.
Yeah. And I think that's actually a really good reason on why, when I see people throw up Schiller PE ratios or market cap to GDP or something like, and say the market's a bubble. Like, I'm not saying things are cheap or like, I'm not saying there's a bunch of no-brainers lying around, but you're comparing, like you said before, apples with oranges. Like, it's just a completely different time frame. It makes absolutely no sense to compare whole market valuations today versus the 80s or something when interest rates were 15% or something.
At least just riding everything on that one metric. I think it's relevant to look at for sure. But yeah, you do have to keep in mind the money supply also just exploded. So like you have to keep that in mind too. That's going to distort things in the short term. And we're seeing some of this kind of settle now. Companies raising prices, inflation is riding up, and that's probably going to bring this down a bit. PE ratios down, not necessarily because prices are decreasing, but because earnings are increasing to catch up with inflation. You could easily see a lot of that over these next few years.
Mm-hmm. Honestly, bonds are really good to speculate at the moment. Like if you're looking at sort of a trade opportunity, like getting into long-term bonds is quite decent using TLT. Not at the moment, but obviously there are times when it makes sense.
Extremely volatile. Yeah.
I was in it like in 2019 Feb. So getting into the crash, I kind of was trading bonds a bit, and it was great at that point. Yeah,
breaking
news. Me a lot of cash.
Bond trader.
Yeah, doesn't Buffett have only like one employee that actually does any investing besides, I guess, Ted and Todd these days, and it was like a bond trader? Is it secretly Karan working under the Buffett?
Could be.
TLT makes sense once in a while.
Yeah. Just one other thing quickly on this topic. Like Karan, you were getting out there with Berkshire. I think a lot of people are viewing companies like bond alternatives at the moment. And that's, I think, the reason that, at least, I mean, who knows where these things will be 20 years from today or whatever. But, companies that people view as kind of indestructible, like Visa and MasterCard and that sort of thing, trade at kind of eye-watering valuations, and Coca-Cola and Procter and Gamble, and I think people just kind of view these as bond alternatives and are happy to earn kind of lower yields.
That's good for a half-eaten pizza.
That's a good one.
Yeah.
After dinner, better have $2 for the rest of us as well. I'm hating that.
He donated to Karan last week as well. He said it was only for Karan.
I can finally get a full pizza now. Yes.
Yeah. We can set up his partnership draw to be that all after dinner investor.
I think Jason has a crush on Karan.
Yeah, I think so. I mean, you can't really blame him, of course, but we appreciated it. We appreciated it in any event, Jason. All All right,
else we
now
got?
how about a final question, maybe?
Yeah, let's do it.
We got people going with the bonds a little bit.
There was
yeah,
one
more
about
news.
holding. There was one about holding periods a while back.
Oh
Super
yeah, I
chat.
remember seeing
Right.
that. Oh, we got.
Hey, there we go. Now we're
Hey,
talking.
hey, hey! Oh, look at him! Look at him double
Now
down.
we're talking.
Look at this!
Playing favorites.
Wow, that's big time. So now he's got to double it again for Tom and I, and then he's got to double it again for the remaining person.
Jason
He's
does
leaving
not.
me as a top dog.
Jason does not understand compounding. That's going to hurt your wallet.
Yeah, it's
sir.
gonna keep, and the next week he double it again. Well, thank you, Jason. We appreciate it.
He's a fellow UFC fan. He holds Barber. He holds Tencent. We're boys, me and Jason.
Yeah, you guys, you just had lunch together today. See each other regularly. But what was that question? It was was
About holding
holding-
periods.
Oh yeah. Oh, here it is. What are your average holding periods? Well, it's frankly, I'm too young in my investing career to really give a good answer. But I guess the goal is forever. But when things change, that's when the investment would change. But I think going into any holding, most of the time, I'm thinking, all right, if all goes well, I'm holding this forever. But if something will eventually change, and then that would probably trigger some sort of sale, or if valuations just go insane and it just makes sense to sell and pivot into something else. That's my stance on it.
If I was, my longest possible holding period would be like 8 years or something. I think that's about when I started investing. And it would probably be long because I started off just in index funds and I held them for ages. So it would make my average seem okay. But looking out into the future, the way I kind of think about it, if I'm looking at a mid cap or large
Super
cap, I'm
chat.
looking at
Okay.
Tim and Jim split up.
We've had a big drawdown there. Thank you, Jason.
Thank you.
Oh, man. But yeah, so looking at mid cap, large cap, or even mega cap company, I'm kind of looking for a 5-year time period, just as I think the growth is limited for larger companies. With the smaller stuff, I look at a 10-year holding period, just as a guideline of how long I want the investment to do well. But of course, like Jack said, you want to hold it forever. You want to minimize those capital gains taxes and stuff over time, keep the compound effect flowing. So as long as it can generate a 15% return each year, that's my goal. I'll hold it for hopefully ever.
Yeah, I think the only time I'd want to sell like quicker would be if there's just this great opportunity and it makes sense to rotate, but then you're still keeping it invested. It's not as though you're liquidating totally. It's more of like, for example, like if I came across this real estate deal that was just amazing, like 100% return in a month, or just something great, and it made sense to pivot into that, then sure. But that's going to be rare anyways.
Hey,
Thanks.
I don't
What
know
is
what AED
AED?
is, but
It looks impressive though.
UAE currency.
Thank you.
Is it really?
Oh,
How
thanks,
much?
Shashi.
How much is that, Karan?
Yeah. What's our-
$6.81 US.
$6, 6,
Yeah.
6, 7.
Okay.
Nice. Thank
Let's
you,
go.
Shashi.
He just upped after dinner investor and become the
Is
top
that
donator.
is that Shashi the winner of the joke contest?
Yes, yeah, it is.
Yes.
I'm going to be meeting him probably in the next week or so.
Oh, that's cool.
Deliver the mug.
Look at this small world.
Let's go.
Jason's jealous.
That's neat. Thank you, Shashi. And thank you for your consistent support. We always appreciate it.
Yeah.
All right. I think it's about time to wrap it up. We're at an hour and a half, but hey, it's only 10 p.m. for me now. It's not friggin' 11:15 like it usually is. So,
But we're shifting next week, right?
yeah, we're going to shift right back to it, most likely. Yeah, but hey, whatever. What are you going to do? I'm used to that, I suppose. Yeah, with that, if you guys enjoyed this episode, or even if you just kind of a little bit enjoyed it, maybe not that much, we'd still very much appreciate it if you guys smashed the like button or tickle it blue, like I said earlier. We appreciate that. It helps the channel out a ton. And also subscribing so you don't miss next week's episode and the many weeks after that. We're at 30 now. Next week will be 31, and we'll keep going from there. We're compounding this punch card investing train. And we've got all the good stuff in the description below. We have our Discord group. We have our our share site link showing our
chat.
portfolio. Oh my goodness gracious,
You
guys!
just ruined the
Trying to
outro.
close.
Dave, my man.
Get some
New
New
NZD in
Zealand
the chat.
dollars.
Yes,
One of
good.
Tom's boys.
we're keeping it diverse here with our
Thank you,
currency
Dave.
We've
basket.
got some Australians, some New Zealand, some
Yeah,
from the UAE,
we got the
some dollars.
I think we got Malaya last time, right? What did we get last? We got some.
The ringgit.
Was it Malaysian? No.
Was it Malaysian
We're
or,
gonna-
what was it?
We're
Yeah.
going to need to track our currencies here. And if you need to track your own currencies in your portfolio, you can use sharesite.com/punchcard investing.
Smooth.
Yes.
Smooth.
Yeah, it was Malaysian ringgit, if I recall correctly. Anyways, yeah.
Super chat.
Hey,
Wow.
the money is flowing.
It's after dinner investors been like flipping out these dollar bills.
He wants
covered
Jack
us
to
like
keep.
the appetizer, the starters, the mains, the dessert, like everything.
Now
we're on to the
we're
nightcap now.
yeah, after dinner coffee now. Like getting everything. Where we got the link pitch, we got the Discord. Was that it? Kron's
Smash
merch
the like
shop.
button.
Next week.
Yeah, I'm gonna just start talking more slowly so we can get more from after dinner investor. He says it was a good week, so hey, he's letting it rain right now. We appreciate that. All right, I got nothing else, so I'll see everyone next week.
See you.